yes, too much pressure.
Get ready for news caustic, bold, sharp, unfiltered, 100% Cyrus.
Co-powered by Servo Hypersport F5 when speed is your default.
This is India's #1 news network, and you're watching News 9. English news as it should be.
Very good morning. You're watching News 9. I'm Karthik Malhotra. Well, the big story that we're tracking for you this morning comes by way of a verbal clarification issued by the government that the Sanchar Saathi app is not mandatory and may be deleted. Remember, this comes less than 24 hours after the written order by the Department of Telecom mandating phone makers to make this app mandatory for users. We'll bring you all the perspectives on that story this morning. Also on the show, Bharat Taxi, from one government app to another. Well, a government-supported Bharat Taxi app is likely to begin its pilot testing in Delhi starting today. Is it likely to compete with Ola, Uber and Rapido? We'll get your perspective on that. And of course, in a market segment, Feroz Aziz will be joining us this morning to help us understand that the volatility that we are seeing in the markets after it touched the lifetime high and Sensex crashing more than 500 points yesterday. Is this volatility got to do with the economy? That and more on this edition of Morning Brief at 9. This is Morning Brief at 9. Here are the headlines we're tracking for you this Wednesday morning. Russian President Vladimir Putin's visit to New Delhi comes as Russia moves to reassure India on trade, energy and defense ties and signals deeper strategic cooperation across missiles, fighter jets and nuclear technology. Finland calls the upcoming India-EU free trade agreement a game changer as it deepens clean tech, digital and investment ties with Maharashtra, home to 1/3 of Finnish firms in India. The government clarifies Sanchar Saathi app is fully voluntary, denies snooping concerns as Communications Minister Jyotiraditya Scindia defends pre-installation move and says users can activate, ignore or even delete the app anytime. And ahead of this clarification, government pushes back. The Apple company, in fact, iPhone maker Apple pushes back against India's order to preload Sanchar Saathi app as surveillance privacy concerns spark political uproar. Staying with Apple, Apple moves Delhi High Court against India's new competition law provisions allowing penalties on global turnover. Nationwide check-in system glitch hits multiple airlines, delays flights across India as Air India cites third-party system failure and Indigo blames operational issues, leaving passengers stranded for nearly an hour. Meanwhile, Indigo to challenge a 117.52 crore rupee GST penalty after authorities deny input tax credit for 2018 to 2022 period, says order is erroneous and has no major financial impact. Cooperative backed Bharat Taxi launches Delhi pilot with 51,000 drivers, taking on Uber and Ola with a zero commission model. And Meta and Ray-Ban launched second generation AI smart glasses in India with 3K video, 8-hour battery, Hindi-enabled assistant, UPI scan and pay trials and new celebrity voices, including that of Deepika Padukone. Just 2 days before Russian President Vladimir Putin lands in New Delhi for the annual India-Russia summit, the Kremlin made a big push to reassure India on trade, energy and defense ties, all at a time when India's relationship with the United States is facing its biggest strain in 2 decades. In a media briefing organized by Sputnik in New Delhi, Kremlin spokesperson Dmitry Peskov said India and Russia are working together to boost New Delhi's exports and to fix the massive trade imbalance that now is heavily in Moscow's favor. He admitted the gap is real. Russia sells far more than India than it buys, but insisted Moscow is ready to purchase more from Indian businesses. On energy, Peskov acknowledged that India's crude oil imports from Russia may dip temporarily, largely because of Western sanctions on Russian firms. But he stressed that Moscow has deep experience navigating sanctions and is confident of keeping energy supplies stable. Now, Peskov said both sides need trade mechanisms that cannot be affected by anyone else and hinted that setting payments in national currencies could be a key agenda item when Modi and Putin meet. Peskov also highlighted the BrahMos joint venture as an example of high technology partnership and indicated possible discussions on the Su-57 fighter jets and more S-400 air defense systems and collaboration on small and medium nuclear reactors as well. Peskov further said that Russia wants its partnership with India to be as deep as its limitless friendship with China, adding that Moscow respects India-China ties and hopes that both Asian giants can resolve their issues peacefully. Remember, Russian President Vladimir Putin arrives on Thursday. His talks with Prime Minister Modi are expected to deliver major outcomes in trade, defense and energy, as well as potentially redefine how the two countries protect their economic partnership from geopolitical challenges. Putin will be accompanied by his defense minister Andrei Belosov and a wide-ranging delegation from business and industry.
Russia and Indian relationship is not just a standard set of diplomatic protocols and trade agreements. It's more of that. It's much more important. Our bilateral relationship rests on a deep historic background of mutual understanding, of partnership, and a mutual vision of global affairs and system of global affairs based on international law, on rule of law, and ability of taking into account each other's interests. This is a very, very important characteristic of our joint vision of the global affairs. We're proud to have been shoulder to shoulder next to our Indian friends during their historic growth in the most important moments of their history. And at the same time, we are very grateful to India for a very friendly stand nowadays. A very friendly stand towards our country and towards our interaction on in bilateral and global affairs.
All right, from Russia's trade with India to Finland's. Well, Finland says a soon-to-be finalized India-EU free trade agreement could transform its business partnership with India's Maharashtra, home to nearly one-third of all Finnish companies operating in the country. Now, speaking in Mumbai, Finland's ambassador Kimmo Ladavitra said the FTA would be a game-changer, opening new opportunities in clean technology, the circular economy as well as digitalization. He said a high-level Finnish business delegation on a two-day visit is aimed at strengthening trade and investment ties and aligning Finnish expertise with India's development priorities. Finland currently has around 100 companies active in India, with about 30 based in Maharashtra. Ladavitra said the relationship is built on sustainability, innovation and trust, and noted the recent opening of Finland's Consulate General in Mumbai as proof of the growing commitment. The visit follows recent India-EU talks where both sides reaffirmed their goals of concluding the free trade agreement by the end of this year. The Finnish embassy said Maharashtra is a key gateway for future trade and business-to-business engagement in Western India. Listen in. And moving on now to the big story that was visible across channels and on social media yesterday, and after that barrage of TV debates and social media posts voicing public concern over government surveillance into private space of mobile devices of citizens, the government clarified yesterday that the Sanchar Saathi app is not mandatory and can be deleted by users. The Department of Telecommunications also said that the app is meant to empower mobile users, not monitor them. It is fully voluntary, works only with user consent and can be deleted anytime, is the new clarification posted by the Department of Telecom. Now, experts point out that this clarification is rather a retraction, as Rule 7B of the original order issued by the Department of Telecom directs phone makers that the pre-installed Sanchar Saathi app is mandatory and its functionalities may not be disabled. Government officials claim the platform has already helped trace lakhs of stolen phones and offer transparent tools to check mobile connections, block lost devices and guard against digital fraud. The government says that the sole purpose of the app is for strengthening India's digital safety and not for snooping. Communications Minister Jyotiraditya Scindia yesterday defended the DoT's directions to phone makers to pre-install Sanchar Saathi on all devices sold from March 2026. He insisted that there is no snooping or call monitoring involved. Now, his narrative to users was that if they want the app, they could activate it. If not, they could simply ignore it or even delete it. Remember, this statement came a day after the government's order to phone makers that led to a massive public and political outcry that makes the statement sound more like a retraction rather than a clarification. Listen in to what Scindia said.
संचार साथी एक ऐप है और एक पोर्टल है जिसके आधार पर हर एक उपभोक्ता अपनी सुरक्षा अपने हाथों से कर पाता है। ये जन भागीदारी का एक कदम है। इसमें लोगों को ऑब्जेक्शन नहीं, लोगों को स्वागत करना चाहिए। इसके आधार पर ना कोई स्नूपिंग है, ना कोई कॉल मॉनिटरिंग है। अगर आप चाहते हो तो इसको आप एक्टिवेट करो, अगर आप नहीं चाहते तो इसे एक्टिवेट मत करो। सुनिए ना, अगर आप इसको अपने फोन पे रखना चाहते हो तो रखो, अगर आप इसको डिलीट करना चाहते हो तो डिलीट करो।
So, Communication Minister Jyotiraditya Scindia's clarification there that the app is not mandatory, it is voluntary and users could choose to delete it. But remember, this verbal clarification or retraction, as experts are calling it, comes after the written order by the Department of Telecommunications and the Rule 7B that the app may not be disabled. Meanwhile, tech giant and iPhone maker Apple has already pushed back against India's order requiring all new smartphones to come preloaded with the government-run cybersecurity Sanchar Saathi app. Remember, the mandate triggered political uproar, with critics warning the app could allow broader state surveillance and weaken user privacy. Reuters filed this report.
Apple doesn't plan to preload its smartphones with a state-owned cyber safety app in India. That's according to 3 sources close to the matter. They said the US tech giant will tell New Delhi about their concerns over the government mandate. The Indian government has confidentially ordered companies including Apple, Samsung and Xiaomi to preload their phones with an app. It's called Sanchar Saathi, or Communication Partner, and authorities want it loaded within 90 days. The app aims to track stolen phones, block them and prevent them from being misused. The government also wants manufacturers to make sure the app isn't disabled. India's Telecom Ministry confirmed the move later and called it a security measure to stop serious endangerment of cybersecurity. But Prime Minister Narendra Modi's political opponents and privacy advocates oppose the move. They believe it's a way for the government to gain access to India's 730 million smartphones, and they argue the app could be used as a snooping tool. India's Communications Minister Jyotiraditya Scindia said Tuesday, in response to the criticism, the app was a voluntary and democratic system. He added users can choose to activate it and can easily delete it from their phone at any time. Sources said Apple will tell the government it doesn't follow such mandates anywhere in the world. That's due to a number of privacy and security issues for the company's iOS ecosystem. Apple and India's Telecoms Ministry didn't respond to requests for comment.
And staying with Apple, the Delhi High Court will hear Apple's petition today after the iPhone maker challenged key provisions of India's updated competition law, particularly the power of the Competition Commission of India to levy penalties based on the company's global turnover. In its lawsuit, Apple has contested amendments made to Section 27B of the Competition Act in 2023 and the new monetary penalty guidelines introduced this year. Now, these changes allow fines of up to 10% to be calculated not just on Indian revenue, but on worldwide revenue across all products and services. Now, this marks a major shift from the Supreme Court's landmark 2017 Excel Corp Care ruling, which held that penalties must be based only on relevant turnover, meaning revenue tied to the specific product in question. Apple argues that using global turnover has no rational link to conduct in India and may lead to disproportionate penalties. The new model, however, brings India closer to practices in the EU as well as the United Kingdom, where global turnover is used to set penalty ceilings. Multiple flights were delayed yesterday, causing inconvenience to passengers across the country after several airlines, including Air India and Indigo, faced a nationwide check-in system glitch. The disruption, which lasted for about 45 minutes, affected check-in operations at various airports. Air India, in a post on its social media platform, said the issue stemmed from a third-party system failure. The airline added that while the system was being progressively restored, some flights continued to face delays until the situation fully returned to normal. Indigo, responding to a passenger online, shared a post saying the glitch was caused by operational issues and apologized for the inconvenience, assuring that they aim to serve passengers better going forward. And staying with Indigo, a penalty of 117 crore rupees and 52 lakh rupees has been imposed on Indigo. I beg your pardon, a penalty of 117.52 crore rupees has been imposed on Indigo by central GST authorities in Kochi after officials denied the airline input tax credit for the years of 2018 to 2019 as well as from 2021 to 2022. In a regulatory filing, Indigo said that it will challenge the penalty and that the order is erroneous, and stressed that it has a strong case based on advice from external tax experts. The airline plans to contest the penalty before the appropriate authority. Indigo also told investors that the development will have no major impact on its financials or operations. Meanwhile, the company's stock slipped 1.6% yesterday to close at 5,697 rupees a piece. And in hopefully good news for consumers, a new challenger has entered India's ride-hailing market. Bharat Taxi, a cooperative-backed app supported by 8 major organizations, including Amul, IFFCO and NABARD, launched its pilot operations in Delhi yesterday, positioning itself as an alternative to Ola, Uber and Rapido. The soft launch includes cars, autos and bike taxis with more than 51,000 drivers already registered. The service is operated by Shakar Taxi Cooperative Limited, a multi-state cooperative formed in June 2025 and even has 2 elected driver representatives on its board. Now, Chairman Jayan Mehta says driver registrations in Gujarat are now underway and that the initiative aligns with the government's vision of Sahkar Se Samriddhi, that is prosperity through cooperatives. Now, Bharat Taxi promises transparent fares, 24/7 customer support, multilingual features, secure onboarding and real-time vehicle tracking. It also runs on a zero-commission model, meaning drivers keep their full earnings while cooperative profits flow back to them. The app is integrated with metro rail services for seamless multimodal travel and is tied up with Delhi Police for rider and driver safety. The government says the aim is to reduce drivers' dependence on private platforms and create a more equitable mobility ecosystem. And in other news, Meta and Ray-Ban have officially launched their second-generation Ray-Ban Meta AI smart glasses in India, bringing major upgrades in battery life, video quality and on-device intelligence. The new glasses went on sale yesterday across Ray-Ban stores and major optical retailers, starting at 39,900 rupees. The Gen 2 model captures sharper 3K Ultra HD video and ultra-wide HDR and now delivers up to 8 hours of continuous use, supported by a charging case that adds another 48 hours. A quick 20-minute charge gives users half a day of power. Now, shooting models like slow motion and hyperlapse will roll out soon. Now, Meta's onboard AI assistant has also been enhanced for Indian users. It now understands and responds fully in Hindi, letting wearers take photos, issue commands or ask questions by simply saying, "Hey Meta." A new celebrity AI voice option is also debuting, with Bollywood actor Deepika Padukone joining the global lineup. Now, Meta is even testing UPI-like payments through the glasses, allowing users to look at a QR code and say scan and pay for instant transactions via WhatsApp-linked bank accounts. And we will slip into a very short break, but markets seem to have opened flat as expected today. We'll understand, is the volatility and the jitteriness in investors' mind got something to do with the mixed cues coming from the Indian economy? Feroz Aziz will be joining us on the other side of the break.
लाख का हॉस्पिटल बिल है, इतने पैसे कहाँ से आएंगे?
पैसों की चिंता आप मत कीजिए पापा।
मैम, सर का हेल्थ इंश्योरेंस क्लेम अप्रूव हो गया है।
आप
पॉलिसी बाजार।
पॉलिसी बाजार पर 0 GST के साथ अब 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
आराम से हाँ। सामान देना भैया।
अब आगे क्या करना है? वो बिट्टू की पर्ची में देखो ना, कहाँ गई पर्ची?
नमस्ते
जी।
हाँ, मुझे पता है वो पर्ची में क्या लिखा होता है। आप चलिए मेरे साथ। व्हील चेयर, ये आपका और ये आपका। पर्ची में शॉपिंग की बात तो जरूर लिखी होती है। थोड़ी पेट पूजा की बात कोई पर्ची में ना लिखे, ऐसा हो सकता है? टिफिन
थैंक यू।
अरे पर्ची मिल गई।
पर्ची में तो ये सब लिखा ही नहीं था।
हम है ना आपकी पर्ची।
सिर्फ वर्ल्ड क्लास एयरपोर्ट्स नहीं चलाते हैं, आपके सफर में हम सफर बन जाते हैं। अदानी, हम करके दिखाते हैं।
A resurgent India is racing towards the Viksit Bharat goal, braving global economic headwinds. Bulletproofing our economy from these uncertainties are Bharat's homegrown businesses. Powered by tech-led innovation, Indian entrepreneurs are truly scaling up, riding the next wave of disruption with AI and cloud to break into the big global league. TV9 Network in association with SAP presents Visionaries of Viksit Bharat, a series celebrating inspirational business leaders shaping tomorrow. Watch them take an iconic leap at Visionaries of Viksit Bharat conclaves. Exclusively on News 9.
ये बेस्ट है मैम।
पर पहले वाला क्यों नहीं?
अजय भाई, This one's for you. बिरला ऊपर इंश्योरेंस देने के लिए।
ऐसा क्या है इसमें?
एडवांस क्वालिटी। 1 साल में पेंट को कुछ भी हुआ तो पेंटिंग वापस करके देंगे।
वापस करके देंगे?
वो भी फ्री।
पटेल भाई, you're a rock star.
क्वालिटी पे इतना कॉन्फिडेंस, इसलिए बिरला ऊपर इंश्योरेंस रजिस्टर करो birlaopus.com पर।
Eastern India's first Business and Economy Literature Fest 2025 on 20th and 21st December at Taj Tal Kutir, Kolkata. EIILM Kolkata presents a Business and Economy Literature Fest 2025. Curation and ideation partner Story Nest.
Back, you're watching News 9. This is Morning Brief at 9. Time now to pivot to the mood on the Lal Street. And as expected, the mood on the Lal Street continues to be fairly somber. Remember, yesterday was the big day where Sensex had slipped more than 500 odd points and Nifty had crashed about 135 points. And even as markets opened this morning, they're absolutely flat from yesterday's already low levels. And this comes just 2 days after Nifty 50 as well as Sensex had hit their lifetime highs. In fact, Nifty 50 had crossed the 26,325 mark, while Sensex had crossed the 86,086 mark. But this morning, after yesterday's massive correction, which was also incidentally the day of the Nifty 50 expiry, markets are trading absolutely flat. In fact, the fears are that the Nifty 50 could potentially slip back below that 26,000 level. Right now, just about 5 minutes into open of trade, Nifty 50 is at 20,000. 86,039. Sensex, meanwhile, at now just around 85,200 odd levels. There's a little bit of consolidation in the mid-cap space. In fact, the Nifty mid-cap is down this morning, sort of in contradiction to the trend in the overall market sentiment, down at about 60,800 odd levels, while the Nifty small cap is absolutely following the trajectory of the large cap companies, flat open, just second decimal points up. Volatility in the Indian market continues to be low right now at below 11 levels. Let's pull up the Nifty 50 heat map and try and make sense of which are the sectors which are adding to whatever little gains that we are seeing in the markets. And it seems that the IT sector is taking very strong cues from the US market. And remember, US markets were trading with handsome gains yesterday. The IT sector taking cues from the US markets, and you're seeing stocks of TCS and Infosys as well as Wipro, in fact, all in the range of 1% to 1.3% higher in trade this morning. The heavyweights from Nifty 50, which had led to the massive bloodbath that we saw on the market yesterday, remember, Sensex was 500 odd points down, came from the three biggies, Reliance Industries, ICICI Bank and HDFC Bank. All these three Nifty 50 heavyweights are in the green this morning. In fact, Reliance is up about 1/5 of a percentage point. ICICI Bank and HDFC Bank more or less flat in trade this morning. Feroz Aziz, the joint CEO of Anand Rathi, joins us this morning. And Feroz, good morning. Thank you so much for taking the time and being here with us on News 9. I want to first understand from you that are we seeing some sort of a correlation in the mixed signals that markets are giving us, and do they have something to do with the Indian economy? And I'll tell you what I'm trying to base my argument on. First up, the Indian rupee has been under pressure. In fact, this morning it has officially breached that 90 rupee mark, now at 90 rupees and 14 paisa per dollar. Then, of course, the trend that we've seen in gold prices, even though they had slightly corrected yesterday, gold prices overall as a trajectory continue to rise. And, of course, that is leading to export and trade deficit pressure as well. In fact, export figures came down about 11.8% in the month of October, and the trade deficit has actually widened to about $41.7 billion or so. Moreover, we are also seeing, despite the high growth that we saw, 8.2% in Q2, we are also seeing that GST collection is growing slower than earlier at just 0.7% for the month of November. And of course, low inflation and high growth is also likely to potentially confuse the Monetary Policy Committee when it arrives at the rate decision by end of this week. So overall, is this sort of mixed signaling that we are seeing from India's macros also reflecting in Indian stock markets?
Yes, absolutely, Karthik. See, there's such high frequency data which comes when it comes to different variables. So it becomes high frequency even if one variable drives the market for a specific period of time. So yes, there has been some degree of negative news, especially on the rupee depreciation side. Of course, RBI stopped intervening with rupee, which I think could be a good strategy from an export standpoint, export competitiveness standpoint. Of course, from a sentiment standpoint, it's a very bad strategy. That's point 2. Point 3, I personally think the rupee will start to stabilize because the current account and capital account both have had outflows. But the capital account, which is what I mean by FII starting to buy Indian stocks, will happen in the next couple of months, is my basic hypothesis, because they've dried up almost most of their frothy ownerships, as we call it. So I personally think that will be your support to the rupee in the next few months. So I personally think that the macro variables, especially like you said, the monetary policy would be a little confused. Inflation has been tamed reasonably well. And of course, the growth has been very good. The nominal growth hasn't been as good because the inflation hasn't been that great. So, but I think the surprise of the GDP growth number didn't get the momentum it needed. Market started slipping back from 26,300. There is some degree of resistance. The lower volatility, the implied volatility, which you spoke of about 11, which is what uses the December month options are used to work backwards to find out the India wicks, throw up a very low volatility. That means we're going to be range bound. So not too much for the trader, but great environment for the investor to build positions, especially after a 1 year time correction.
What should those positions really be, and which are the themes that those investors, I understand that it's going to be low volatility is bad news for traders, but for investors, again, if you just look at data from this week, on Monday, Sensex and Nifty had touched their lifetime highs. In fact, Nifty 50, as you mentioned, had breached the 26,300 levels. And then yesterday, we saw a massive correction. This also happened to be Nifty expiry. And this morning, again, we are seeing markets open flat, despite the fact that US markets and India used to take more sort of solid cues from, is working pretty much, not in tandem with what we are seeing on Wall Street and the Lal Street. And then, of course, some of the sectors that many experts said that are likely to outshine continue to be the bank Nifty, the banking financial services. But we are seeing that even that consolidation is now building at levels below 60,000, and Nifty IT is about 9,000 points below its 52-week high. So you're saying that investors could take positions, but in this sort of confused setup, what kind of positions and which thematic sectors or stocks are investors likely to place their bets on?
Yes, Karthik, before I come to your specific question of sectors and theme, one hypothesis which I tested, which could be a great foundation principle, is when the markets are up, don't buy too much direct equity. You would rather take a mutual fund kind of a route or a sector index, which you can buy. Why is that you would have seen during this latest rally, and markets are at the peak, but portfolios are not at the peak.
That's right.
Because when you see markets are high, if you start buying direct equity, then what happens is you're buying some really, really expensive stocks. Like if you ask me the same question in February last month of this year, when the small caps and mid caps had corrected, I would say that the tilt should have been towards buying individual stocks than buying mutual funds. Today, if you see my mutual fund basket, 14 scheme basket, is outperformed Nifty by about 3-4% for the last 1 year.
All right.
But a direct equity portfolio has underperformed Nifty significantly. So when markets are high, buy mutual funds. When markets go through a steep correction, like the Liberation Day, markets corrected, then you don't buy mutual fund NAVs, mutual fund
buy stocks.
units. You buy stocks.
Right.
If you can make this as a principle, you will make sure that your portfolio on the equity side outperforms a more agnostic strategy by 2-3% per year, tested for long periods of time in different methods of testing. So that's one hypothesis which I wanted to put on the table.
All right. And now to my... Okay, go ahead.
Yes, please go ahead, Karthik, I'm sure.
No, so I'm saying now to my specific question, that when you say whether mutual funds or direct stock picking, depending on whether markets are high or low, and that's a great hypothesis, and I'll definitely remember that. What sectors and what stocks should investors choose when markets are high at a time like we are witnessing right now?
See, I'm liking anything to do with consumption is going to be good, because it seldom happens that there is hype and there is tailwind and there is not too much past performance.
Okay.
The tailwind on consumption is very high. The kind of structural changes which have promoted consumption, which will pan out over long periods of time, has also been done. But the consumption stocks are still available if you do bottom-up stock picking. Or on the consumption side, we have 27 funds, 27, 28 funds. You can buy a consumption fund if you wish to beat Nifty by about 4-5% per year over the next 3 years.
All right. So case in point, and the chart that you're seeing on the screen right now, you're saying that markets are high, avoid direct stock picking, but it seems that there is massive correction in consumption stocks, especially auto stocks this morning. Would you still suggest that the strategy should be to buy, let's say, Nifty auto rather than specific stock picking, even on a day like today where there is correction?
So I would say Nifty auto is a better bet, because auto is also, I think, buying Nifty auto, buying any sector. See, if you're taking a sectorial call, if you're very sure about the sector, you should buy the index.
All right.
If you're more sure about the stock and the management, you should buy the stock.
All right.
I think Nifty auto would be a better bet, more hedged bet. And if your objectives are simple, to beat Nifty by 4-5% after cost, going the least risk method to achieve that high probability outcome is a better strategy.
All right. And you're mentioning consumption. I'm also looking at the FMCG stocks this morning, and there seems to be a massive correction in those this morning. Hindustan Unilever down about 2.4% or so. Nestle down about 1.4%. Tata Consumer Goods down about 1.2%. Is this got something to do, in your opinion, with this sort of confused MPC decision making that we were discussing about earlier? Is this got something to do with the possibility that RBI may not shave off that 25 basis points in the MPC?
Yes, I think the expectation is that the rates would be unchanged.
Okay.
Even if there's a conducive environment for a downward cycle in continuing, but I don't think this MPC will do that bit. 5.5 would be retained is the current assumption. If that's the kind of environment over the next 3-4 days, you would see some degree of profit taking, especially when the stocks which you read out, I think from a valuation standpoint and PEG standpoint, not just PE, PEG, the growth which is there, I think they're a little more frothier. So I think that's when there is some degree of uncertainty, lesser optimism on the MPC and higher PEG, resulting in some degree of profit taking on these counters.
All right. Final question to you, Feroz, this morning. And this comes to me, by views that some experts have shared on our channel, that markets are potentially not seeing as much retail inflow right now because a lot of investors are placing their bets on IPOs and 40,000 crore rupees worth of IPOs for the month of December. I want to get your view on what investor strategy should be on playing IPOs, specifically because today happens to be the IPO open for Meesho, remember, which opens today and closes on Friday. Price band of 105 to 111 rupees per share, already attracting a grey market premium of about 42 rupees. So specifically on an e-commerce player like Meesho now coming into public markets, public trading, and overall IPOs as a strategy when markets already are at pretty much all-time highs, what do you make as strategy for investors to play in IPOs?
Yes, firstly, I would validate some numerically the thing which you said, retail is not participating. That's so true. If you look at the last 4-5 trading days of November, all 5 days retail has sold mal in the market, in the cash market especially. The 26th November was one of the largest sales, 3,409 crores.
Right.
So retail has been pulling out money to keep their dry powder for these IPOs.
Okay.
Point taken. IPO market, when it dries down, the money comes back into the rest of the stocks, because Indian retail, if you look at the kind of volume, all these IPOs on the first day itself, first few days, they trade 5 times more than the free float they have pumped in. So these investors are very different. Any IPO where retail exits on the first 3-4 days and insti buys are very stable IPOs for businesses which you will own for the long run. Coming back, so the IPO strategy has to be either listing gain for a person or long-term ownership. Long-term ownership is very easy to decipher. In the first 5-7 days, if you see huge institutional buying, then those are the counters where you would want to buy and hold for long periods of time. Coming to one thing which you rightly mentioned, Karthik, I'm taking you back to one hypothesis which I tested and I would like to validate. Like you said, we don't have too much correlation with the US anymore.
Yeah.
I was trying to see which are the periods where Indian markets are correlated to the US.
Okay.
And whenever FIIs have been investing, and FII is the key driver of the current season of the market move, that time US sentiment has a very strong correlation to India. Now, for the last few months, you see FIIs exiting. That's why FIIs are not driving the Indian sentiment. So when FIIs come back in, our correlation with the US will dramatically shoot up at that point in time.
So just one follow-up question on that, and I'm sure when you correlate that data, there is likely to be a strong correlation. But just one question, that with the rupee weakening and rupee under pressure now breaching that 90 rupees a dollar mark, do Indian stocks become more valuable and sort of easy to acquire for FIIs, because the dollar value gets them more shares, doesn't it?
Yes, definitely from a short-term standpoint, it certainly does. But one thing which has been the problem is, if you look at today's depreciation, it will look like exaggerated because we've reached 90 and this year we've depreciated 6-7% now. But if you see 1st January 2023, we were at 82.64. So the depreciation is about 8 rupees or 7.5 rupees from that point in time. 7.5 rupees on a base of 82 is 9% depreciation in close to 3 years, which is a 2.7% compounded depreciation. So for this year, definitely it has helped. But if you look at long-term depreciation, you're still at that same interest rate parity number of 3%.
Right, Feroz. Thank you so much for all those very, very valid points that you have brought to our viewers this morning. And as always, pleasure having you here with us on News 9. Thank you so much. And we will slip into another short break. But before that, here are the global stories that we're tracking for you this Wednesday morning. High-stakes peace negotiations between US envoy Steve Witkoff and Russian President Vladimir Putin fails to yield any breakthrough on Tuesday, as Kremlin says no compromise found yet on the key question of contested Ukrainian territory. US Defense Secretary Pete Hegseth defends escalating strikes on drug trafficking boats, brushing off criticism that maritime operations may amount to extrajudicial killings. US Homeland Security Chief Kristi Noem urges expansion of the list of countries covered by President Donald Trump travel ban, saying migrants were flooding America with killers and leeches. US tech billionaire Michael Dell moves $6.25 billion into children's trust funds through a new program created by President Donald Trump to encourage large-scale generational donation. French President Emmanuel Macron set to travel to China on Wednesday to put pressure on Chinese counterpart Xi Jinping to help secure a pro-EU ceasefire in Ukraine and discuss trade relations. Saudi Arabia greenlights the 2026 budget, projecting a deficit of $44 billion as the kingdom presses on with ambitious spending drive to diversify the oil-dependent economy into artificial intelligence. Australia says social media ban set to begin from December 10th will save young kids from purgatory, even as youngsters fear increased isolation of marginalized youth in the country. Amazon Web Services launches its most advanced in-house processor yet, aiming to challenge Nvidia's dominance in AI computing as demand for high-end chips explodes. And minimalist luxury brand Prada buys maximalist fashion house Versace for $1.4 billion in a bid to relaunch a more tempting version of its Milan rival. These stories on the other side of the break. You're watching News 9.
लाइफ जब भी आगे बढ़ने का मौका दे तो अपनी सुपर पावर, अपना गोल्ड यूज करिए और IIFL फाइनेंस से गोल्ड लोन लीजिए।
IIFL फाइनेंस करता है सीधी बात।
सोच रहा हूँ टर्म लाइफ इंश्योरेंस ले लूं ताकि मेरे बाद फैमिली को पैसों की कमी ना हो। तू भी ले ले।
अबे जल्दी क्या है, बाद में देख लेंगे। आराम से आराम से आराम से।
अब तक कुणाल को हार्ट अटैक आ गया यार। पॉलिसी बाजार पर 0 GST के साथ अब 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू।
आराम से आराम से।
हाँ।
सामान देना भैया।
अब आगे क्या करना है? वो बिट्टू की पर्ची में देखो ना, कहाँ गई पर्ची?
नमस्ते
जी।
हाँ, मुझे पता है वो पर्ची में क्या लिखा होता है। आप चलिए मेरे साथ। व्हील चेयर, ये आपका और ये आपका। पर्ची में शॉपिंग की बात तो जरूर लिखी होती है। थोड़ी पेट पूजा की बात कोई पर्ची में ना लिखे, ऐसा हो सकता है? टिफिन
थैंक यू।
अरे पर्ची मिल गई।
पर्ची में तो ये सब लिखा ही नहीं था।
हम है ना आपकी पर्ची।
सिर्फ वर्ल्ड क्लास एयरपोर्ट्स नहीं चलाते हैं, आपके सफर में हम सफर बन जाते हैं। अदानी, हम करके दिखाते हैं।
Back, you're watching News 9. This is Morning Brief at 9. On to global stories that we're tracking for you this morning. US President Donald Trump has issued one of its sharpest warnings yet on drug trafficking, saying any country moving illegal narcotics into the United States could face military action. His comments come amid growing security over Washington's aggressive targeting of suspected drug smuggling vessels, a campaign that's already resulted in more than 80 deaths so far. Listen in.
Through a certain country or any country, or if we think they're building mills for whether it's fentanyl or cocaine. I hear Colombia, the country of Colombia, is making cocaine. They have cocaine manufacturing plants, okay? And then they sell us their cocaine. We appreciate that very much. But yeah, anybody that's doing that and selling it into our country is subject to attack.
US President Donald Trump as well as Brazilian President Lula da Silva held a phone call on Tuesday discussing trade, economic ties and cooperation against organized crime. In a social media post, Trump said he looked forward to seeing and speaking with his Brazilian counterpart Lula da Silva soon, adding that much good will come out of this newly formed partnership. According to a statement from the presidential palace, Lula da Silva thanked President Donald Trump for removing additional U.S. tariffs on key Brazilian imports, including coffee, beef and cocoa, and pushed for progress on remaining trade barriers. And American entrepreneur Michael Dell and his wife Susan have pledged a record $6.25 billion to support US President Donald Trump's Invest America initiative, commonly known as Trump Accounts. Now, the program was created under President Donald Trump's One Big Beautiful Act and has triggered strong interest from Wall Street firms seeking to participate in the rollout.
Michael and Susan Dell are committing to one of the largest private donations in American history, which will directly benefit the next generation of American children through the new Trump Accounts program that we created in our One Big Beautiful Bill.
Susan and I are super excited to announce our $6.25 billion gift to 25 million American children, 10 and under, and our gift will cover most of the children that are 10 and under that are not part of the federal program, the 0 to 2-year-olds, and who also live in zip codes where the median income is $150,000 or less.
And reports suggest that as much as $1,000 each is likely to be deposited in those under 10 accounts in underprivileged American kids. Well, moving on now, Wall Street extended its winning run on Tuesday. U.S. stocks closed higher, marking 6 gains in the last 7 trading sessions in a day of light holiday trading, with tech shares once again leading the move. Now, investor optimism remains strong ahead of the next week's Federal Reserve meeting, with markets still expecting an interest rate cut.
Wall Street's main indexes closed higher on Tuesday, with the Dow gaining about 0.4%, the S&P 500 adding 0.25%, and the Nasdaq rising roughly 0.6%. The bounce back from Monday's sell-off coincided with bond yields easing and a rebound in Bitcoin, which a day earlier suffered its largest dollar loss since May of 2021. Investors' focus shifted toward the Federal Reserve, with traders' expectations for a December rate cut at nearly 90%, according to CME's FedWatch tool. Still, inflationary fears remain, says George Goncalves, U.S. head of macro strategy at MUFG Securities.
So inflation in the early part of 2026 has some risks of rising. If you recall, going back to the beginning of this year, there was a lot of inventory front running ahead of the tariffs. There was kind of lower comps in terms of overall inflation. And, there hasn't been a clear pass through yet completely of all the sort of price rises that have happened as a result of the tariffs. So we do think that on the core goods part of the inflation basket, we do think that there's still some residual inflation catch-up that has to happen, and it probably takes place in the first few months of the year.
Stocks on the move Tuesday included Boeing, which soared 10%, giving the Dow its biggest boost after the plane maker forecast higher deliveries for its 737 and 787 jets next year. Bitcoin's rebound lifted crypto stocks, including Strategy, which gained nearly 6%. And shares of American Eagle jumped 15% in extended trading after the company raised its annual sales forecast, thanks in part to a controversial ad campaign featuring actress Sydney Sweeney.
Let's go deeper into that Boeing shares story, as shares rose about 9% soon after the US plane maker said it expects higher aircraft deliveries in 2026, including more Boeing 737 and the 787 Dreamliner jets, a signal for investors that the company sees production stabilizing after months of scrutiny and supply chain pressure. Take a look.
Shares of Boeing rose more than 9% Tuesday morning after the plane maker said it expects higher jet deliveries and positive free cash flow next year. Boeing has been trying to improve its image after a more than 5-year corporate crisis involving safety and production issues of its 737 series, which has hurt its reputation and sent it deeply into debt. But the company's CFO, speaking at a UBS conference on Tuesday, said he expects deliveries on both the 737 and the 787 to grow in 2026. He added that those deliveries, along with other improvements in the company's defense and space unit, are expected to be Boeing's primary drivers for better margins next year. He also said Boeing would deliver on its annual $10 billion free cash flow target, a metric closely watched by investors. Boeing has been trying to win a race for narrow-body plane orders with Airbus, but has historically lagged well behind the European plane maker. Airbus is now dealing with challenges of its own after discovering an industrial quality issue affecting fuselage panels on several dozen A320 family aircraft and following a weekend recall of jets over a software bug.
Russian President Vladimir Putin wrapped up nearly 5 hours of talks late Tuesday with U.S. envoy Steve Witkoff and Trump advisor Jared Kushner on a revised peace framework for Ukraine. But the Kremlin says no compromise was reached. Take a look.
So pleased to see Russian President Vladimir Putin met with U.S. President Donald Trump's special envoy, Steve Witkoff, and the president's son-in-law, Jared Kushner, at the Kremlin on Tuesday. Their mission to Moscow is aimed at finding a way to end the deadliest European conflict since World War II. A leaked set of 28 U.S. draft peace proposals that emerged last week stoked alarm with Ukrainian and European officials who said it bowed to Russia's main demands. European leaders crafted a set of counter-proposals aimed at tilting the balance toward Ukraine. Just before Tuesday's meeting, Putin dismissed European counter-proposals on Ukraine as being absolutely unacceptable to Moscow. And he warned Europe that it would face swift defeat if it went to war with Russia. Trump has repeatedly said he wants to end the war in Ukraine. But his efforts so far, including a summit with Putin in Alaska in August and meetings with Ukrainian President Volodymyr Zelensky, have not yet brought peace. At a cabinet meeting in Washington, Trump said it would not be an easy situation to resolve.
And our people are over in Russia right now to see if we can get it settled. Not an easy situation, let me tell you. What a mess.
On Tuesday, Russia's defense ministry claimed its forces had completed the conquest of Pokrovsk, a strategic city in eastern Ukraine. Ukraine said its forces still controlled parts of the city. Russian forces now control more than 19% of Ukraine. Despite high losses, that's up only 1 percentage point from 2 years ago, though they have advanced in 2025 at the fastest pace since the invasion, according to pro-Ukrainian maps. But nearly 4 years after Moscow's forces invaded their smaller neighbor, Russia has failed to conquer Ukraine, which has been supported by European powers and the United States.
We are waiting for the results in America-Russia negotiations, today's results.
Ukrainian President Volodymyr Zelensky, speaking in Dublin, said everything would depend on the talks in Moscow.
Meanwhile, NATO General Secretary Mark Rutte says the alliance still does not have consensus on Ukraine's potential membership. Comments that come as reports emerge of US peace proposals being privately discussed with Moscow. Remember, Ukraine's NATO future remains one of the war's biggest sticking points, a condition Russia has repeatedly rejected and an assurance Kyiv still doesn't have on paper or on the battlefield. Listen in to the NATO chief.
Ukraine clearly applied for membership, but we also know, as I said, and this is a statement of practicality and a statement of fact, that there is no unanimity within the alliance about Ukraine coming in the alliance. And that's one of the reasons when it comes to a future peace deal, we are discussing how, if not NATO membership, how we can make sure that Ukraine is protected in a way by itself, but also with help from others, so that the Russians will not try again.
And global luxury Prada has officially completed its long-planned takeover of Versace in a deal worth about $1.5 billion. Now, the iconic Milan-based label now joins Prada under one group, marking a major shift in Italy's high fashion landscape.
Prada said on Tuesday it had completed the acquisition of smaller Italian rival Versace. Prada signed a definitive agreement in April to buy Versace from US-based Capri Holdings for just over $1.5 billion. That was after Capri's sale to Tapestry was scrapped in the wake of a challenge by antitrust regulators. Lorenzo Bertelli, the son of Prada owners Miuccia Prada and Patrizio Bertelli, told Reuters in November that he will become the executive chairman of Versace once the integration is complete. He said that Prada had been keen on a deal for several years. Founded in 1978 by Gianni Versace in Milan, the brand has been renowned for its bold, glamorous aesthetic. It will join the group's two main labels, its namesake Prada and the smaller but fast-growing Miu Miu. It marks a sharp strategic shift in the Italian fashion house. In March, a few weeks before the deal with Prada was announced, Donatella Versace stepped down as creative chief after almost 3 decades in the role. Dario Vitali, who was formerly design director at Miu Miu, took over the job.
And that's all we have for you on this edition of Morning Brief at 9. If you have been, thank you so much for watching. But news continues right here on News 9, so stay tuned.
This is India's #1 news network, and you're watching News 9, English news.
It's been 10 years since the founding of Cars24.com. Talk to us, what's this journey been like?
It's been a roller coaster. First 5 years felt easy.
Okay.
Next 5 years felt harder.
The first 5 years is supposed to be the most difficult years.
Yeah, for me it was the other way around. First 5 years felt easier. The next 5 years felt harder.
Why so?
I think as we grew, we took up more challenges.